Hi, welcome back. We're going to be looking at the answers to the questions that you took in your third test. Well, the chapters that were covered in this test were subsidiary books and cash books. Right. Before I start reviewing the questions, I'd just like to give you a small introduction on what this chapter is. Right. See, any business will have to record all its transactions first in books of prime entry. Okay, and these books of prime entry are otherwise called subsidiary books. There's another term, an omnibus term, which is called the journal. So when I say the term journal, it means all the subsidiary books. And a journal can be broadly classified as the goods journal, cash journal, bills journal, and the journal proper. Goods journal can be further classified as purchases book, sales book, purchase returns book, sales returns book. The cash journal can be classified as the cash book and the petty cash book. Here we must note that though the cash book is a subsidiary book or the book of prime entry, it is also a ledger, right? And then we come to the bills book or the bills journal, which includes the bills receivable book and the bills payable book. And finally, we have the journal proper. So transactions that cannot be recorded in the goods journal or the cash journal or the bills journal will be recorded in this residuary book, which is called the journal proper. So with this background, let us look at the various answers to the questions that you took in this test. Right, the first question is, a debit note for ₹1000 issued to Mr. X for goods returned by us is to be accounted for in which book? Right, so before I tell you the answer to this question, I'll tell you what a debit note is. Right, a debit note is a note which is prepared by the purchaser when he returns the goods to the seller. So at the time of purchase returns, a debit note is prepared, and based on this debit note, the person who is returning the goods, that is the purchaser, will make an entry in the purchase returns book. So here the question is, debit note for 1000 issued to Mr. X for goods returned by us is to be accounted for in the purchases returns book. So answer is D. Next question. A purchase of goods by Sohan from Mohan for ₹1000 will be recorded in which book? So this is a purchase of goods, and it is a purchase of goods for credit. Since it does not explicitly say that it's been purchased for cash, it is a purchase on credit, and all credit purchases of goods have to be recorded first in the purchases book. Purchase of furniture or purchase of a fixed asset will not be recorded in the purchase book, because what is recorded in the purchases book is what falls within the definition of the term purchases. And purchases means purchases of goods in which the business is trading in, or rather purchase of stock in trade is what we mean by the term purchases. So in this case the answer is D. Let's look at the third question. A second-hand motor car purchased on credit from B for ₹10,000 is to be recorded in. Okay, so this is a purchase on credit, but is it a purchase of goods? No, it is not a purchase of goods. It's a purchase of an asset. Okay, so this purchase of asset on credit will be recorded in the journal proper. So answer is A. Next, fourth question. Accounting for partial recovery from Mr. X of an amount of ₹1000 earlier written off as bad debt is to be done in which book? Okay, so when the debt was written off as bad, the entry would have been bad debts account debit to Mr. X. This entry would have been made in the journal proper. Okay, now a debt that was written off as bad a portion of that debt has been recovered, which means cash has come in. So the entry will be cash account debit to bad debts recovered account. So since cash is involved, the entry will be made in the cash book. So answer is D. Next, fifth question. The bank column of the cash book may show. Okay, so we want to know what's the nature of the balance in the bank column of the cash book. See, bank column of the cash book may show either a debit balance or a credit balance. Debit balance means a favorable balance, which means the business has money in its bank account. Credit balance means unfavorable balance or an overdrawn balance. If the bank has given an overdraft facility to the business, then it is possible that the bank column of the cash book shows a credit balance or an overdrawn balance. So answer is C. So the balance can be either a debit balance or a credit balance. Next, bills payable book is part of the journal. As I told you earlier, journal can be broadly classified as the goods journal, the cash journal, the bills journal, and the journal proper. So bills payable book is part of the bills journal, to be specific. So answer is A. Next, question number 7. Cash payments are recorded on which side of the cash book? Let us assume a cash payment. For example, let us say cash is being paid to settle creditors. The entry would be creditors account debit to cash, because the liability towards creditors reduces, so we debit the creditors and cash goes out, so there's decrease in assets, so we credit the asset. So the entry is creditors account debit to cash, and in the cash account, since cash is being credited, we'll have to post this on the credit side of the account. So all cash payments will be recorded on the credit side of the cash book. So answer is B. Next, cash receipts are recorded on which side? Cash payments we saw are recorded on the credit side, so cash receipts will be recorded on the debit side. We'll take an example. Let's assume that debtors have settled their balances. We receive money from debtors, so entry will be cash account debit to debtors, because cash comes in and debtor balances go down. So entry will be cash account debit to debtors, and in the cash account we'll be posting this on the debit side. So answer is A. Next, closing entries are recorded in which book? Is it recorded in the cash book, the ledger, the journal proper, or the balance sheet? Right? See, closing entries are entries that are passed to transfer the balances in the nominal accounts to the trading account and the P&L account. For example, the purchases account is closed by transferring the balance to the trading account by passing the entry trading account debit to purchases account. Similarly, rent account is closed by transferring the balance in the rent account to the P&L account by passing the journal entry P&L account debit to rent. So such entries are closing entries, and they are first recorded in the journal proper, after which they are posted in the respective ledger accounts. So answer is C. Next, 10th question. Credit purchase of stationery worth ₹1000 by a stationery dealer is to be recorded in which book? So this is a credit purchase, and it is a credit purchase of goods, because this is purchase of stationery by a stationery dealer, and hence he would record this in his purchases book. Next, discount column of a cash book may show which balance? Right? One thing that we must know that is that discount column of a cash book is never balanced. Okay, so it is only a memorandum column that is included in the cash book. The discount received column and the discount allowed column in a 3-columnar cash book are only memorandum columns. They are not balanced, they are only totaled, and the totals are posted on the in the correct side of the respective accounts. So discount column of a cash book is never balanced, and the answer is D, none of the above. Next, goods brought in by the proprietor as his capital contribution are recorded in. Okay, suppose the proprietor brings in cash, we would record it in the cash book because cash comes in, but here the proprietor is bringing in goods and hence it would be recorded in the journal proper. So answer is C. Next, 13th question. Goods costing rupees 900 were sold to Ram for rupees 1000 on 1st Jan 2011. On 1st Feb 2011, Ram paid rupees 950 on account. Ram's account should be credited with 900 or 950 or 1000 or none of the above. Okay, so the amount that is receivable from Ram is 1000 rupees and Ram has paid 950 rupees on account. So we have to read the problem here carefully. It says 950 paid on account means 50 rupees is still due from Ram. Suppose the problem had said that Ram had paid 950 in full settlement of his account, it would mean that there is nothing which is receivable from Ram in future, and the 50 rupees is the discount that has been given to Ram. Okay, so in this case we would be crediting Ram with 950 rupees. So answer is B. Goods sold for cash were returned by a customer, but cash was not given immediately. These are recorded in which book? Okay, so when goods are sold on credit and they are returned, it would be entered in the sales returns book. But here goods are sold for cash and they are returned, but cash has not yet been paid to the customer. So such cases or such transactions will be accounted for in the journal proper. If Ram has purchased goods for cash, the entry will be recorded in the cash book because there is an outflow of cash and it has to be recorded in the cash book directly. So answer is A. Next, question number 16. If the debit as well as the credit aspects of a transaction are recorded in the cash book itself, it is called. Okay, so we'll take an example to understand this. Let us assume that cash is being deposited into the bank and we are maintaining a two-columnar cash book. A two-columnar cash book means on the debit side and on the credit side there will be two columns, one for the cash, one for the bank. So on the debit side we would be recording all the cash receipts and the bank deposits, and on the credit side we would be recording all the cash payments and the withdrawals from the banks or checks issued. Right. So now let's take a transaction like cash is being deposited into the bank. So the entry will be bank account debit to cash, because bank balance goes up, we have to debit the bank and cash balance reduces, so we have to credit cash. So how will we post this in a two-columnar cash book? So bank account debit to cash, so we would be debiting the cash account, or we would be debiting the cash book in the bank column. Right, we would show the debit in the bank column of the cash book and we would show the credit in the cash column on the credit side of the cash book. So both legs of this transaction are being posted in the cash book and hence it is called a contra entry. So answer is D. In a three-columnar cash book, a three-columnar cash book has three columns on either side. There is a cash column, a bank column, a discount allowed column, and on the credit side you have a cash column, a bank column, and a discount received column. As I told you earlier, discount allowed and discount received columns are not balanced, they are only totaled, and only the bank column and the cash columns are balanced. So answer is C. In a three-columnar cash book, Okay, so this question is with respect to trade discount and cash discount. Um, right, so we first of all need to understand the distinction between trade discount and cash discount. I had discussed this in the previous review session, but I'll just quickly take you through that. Trade discount is the discount that you get when you make a bulk purchase or because of the good relationship that you have with your supplier. So a trade discount is never accounted for in the books. There's no separate account that will record or account for trade discount. The purchase cost is always net of the trade discount. Cash discount is the discount that is got when the payment to the creditor is settled promptly. So cash discount is accounted for in the books, and when we maintain a 3-column cash book, we will be having a a discount received column on the credit side of the cash book, and hence answer is B in this case. A is ruled out straight away because, as I told you, we never account for trade discount. B is cash discount received is recorded on the credit side of the cash book. Cash discount is received when creditors are being settled. So when we settle creditors, we show it on the credit side of the cash book because cash goes out, and at the time of settling creditors, we get a discount, and hence the discount received column is on the credit side of the cash book. And so B is the answer. C, discount columns are balanced. We'd already discussed that. That's not right, and so answer is B. Next, interest accrued for the month of March will be recorded in, okay, so transactions or entries pertaining to depreciation or outstanding expenses or prepaid expenses or incomes that are receivable, these are all called adjusting entries, and adjusting entries are passed in the journal proper. So entry will be passed in the journal proper. Answer is D. Next, journal proper is part of the journal. Yes, as I told you, a journal is an omnibus term which includes all the subsidiary books, and journal proper is the residual or the residuary subsidiary book, and journal proper is part of the journal. So answer is A. Next, journal proper is used to record A, all cash purchases of assets other than goods. The moment we encounter the term cash, it means it has to be recorded in the cash book. So straight away we can eliminate A and B. If we look at C, returns of fixed assets purchased on credit, yes. So this will be recorded in the journal proper. D is not the answer because when we recover an amount which has already been written off as a bad debt, cash comes in, and the moment cash comes in, that entry has to be, or it has to be recorded in the cash book first. So answer is C. Next we come to question number 22. Purchase of machinery by Mr. X, a dealer in machinery, from Mr. Y for rupees 1 lakh is recorded in, right? So this is a purchase, it's a credit purchase, and it is a purchase of goods because X is a dealer in machinery and he is buying machinery on credit from Y, and hence we'll record this purchase in the purchases book. Next, purchases account in the ledger shows, okay, so while the purchases book will show us only the total of all the credit purchases made during the period, the purchases account will show us all the purchases, that is the credit purchases and the cash purchases. So purchases account will show us the total of all purchases made, all purchases of goods made during the year. So answer is A. Sale of goods by Mohan to Sohan for 1,000 will be recorded in which book? Sale of goods, this is sale on credit, and this is a sale of goods, and so it will be recorded in the sales day book. Sale of machinery by Mr. X, a dealer in machinery, to Mr. Y for 1,20,000 rupees is recorded in Yeah, so this is similar to what we saw. Uh, Here X is a dealer in machinery, so machinery is his goods and he's selling it on credit, and so he would record the sale of goods on credit to Mr. Y in his sales day book. Right, the sales account in the ledger, well, the sales account, while the sales day book will show us only the total of the credit sales of goods made during a particular period, the sales account will show us all the sales that have been made, that is the credit sales as well as the cash sales that have been made during a particular period. So the answer is all sales of goods. Yeah, sales book is part of the journal. To be very specific, it's part of the goods journal. So answer is A. Sales returns book is part of the journal. Again, to be specific, it's part of the goods journal, and answer is A. Next, sales returns book is used to record what? See, the sales book is used to record credit sales of all goods, and so sales returns book is used to record the sales returns of goods that have been sold on credit. Okay, so suppose there is a sales return of goods that you have sold for cash, right? That, and suppose goods are coming back to you, and these goods had earlier been sold for cash and cash is not yet refunded to the customers, then you will make an entry for such goods in the journal proper. But in this case, the question is, the sales returns book is used to record returns of goods that were earlier sold on credit. Next, question number 30. The balance in the petty cash book is, right? So we'll all be tempted to answer it as an expense because we think the term petty cash means it doesn't have any value. That's not right. Petty cash means cash that is used to meet petty expenses. So the balance in the petty cash book is an asset. It is very much cash which is added along with the cash in the cash balance that we get from the by balancing the main cash book, and it is shown as an asset in the balance sheet. So answer is C. Next, the credit notes received are used to prepare. Okay, right. So let's get some clarity on what we mean by debit notes and credit notes. I just told you what a debit note is. A debit note is a note that is prepared by the purchaser and sent to the supplier at the time of returning goods that have been purchased by the purchaser. So credit note is the note that the supplier prepares when he gets the goods back from his purchaser. If X has sold to Y and Y is returning the goods to X, then X will issue a credit note to Y saying that he is crediting Y's account in his books and accepting the goods from Y as sales returns. So credit notes received will be used to prepare our purchase returns book, right? So when we receive credit notes, the purchaser will receive a credit note when he issues or when he returns the goods that he has purchased. So when you receive credit notes, it is a case of purchase return, and that would be entered in the purchase returns book. Yeah, answer is C. Next, the debit notes received are used to prepare. So debit notes will be received from the purchaser. So at the time of purchase return. So when we receive a debit note, it is actually a case of sales returns for us, and based on the debit notes received, the transaction or the return of goods will be entered in the sales returns book. So answer is B. Then question 33. The following is a book of original entry and also part of the ledger. This is a cash book, right? The journal, as I told you, is an omnibus term, and it includes all the other subsidiary books, so that's not the answer. Purchases book and sales book are purely books of prime entry, and so the answer is cash book B. Next, the invoices issued are used to prepare. Okay, so now we know that when we make a sale, we have to make an entry in a sale, oh sorry, when we make a credit sale of goods, it has to be entered in the sales book. But on what basis do we make an entry in the sales book? There has to be a source document, right? So the source document based on which the entry is made in the sales book is the invoice that is issued. Okay, so when X sells to Y for 1000 rupees, X will issue an invoice in favor of Y for 1000 rupees, based on which he'll make an entry in his sales book. So the answer is A. The source document used for recording entries in purchases book is, okay, so when X sells to Y, X issues an invoice to Y, so Y receives the invoice, and based on the invoice that he receives, which is the source document for the purchase that he has made from X, he'll make an entry in the purchases book, right? So here the source document that is used for recording entries in purchases book is the invoice that is received. Answer is A. Next, question number 36. The source document used for recording entries in purchase return book is, okay, so options are invoice received, no. When you receive an invoice, we make an entry in the purchases book. When invoices are sent out, based on that invoice, entry is made in the sales book. When credit notes are sent out, entry is made in the sales returns book. And when debit notes are issued, that is the time when we make an entry in the purchase returns book. So answer is D. Next, the source document used for recording entries in the sales day book is, yes, this is a repetition. Answer is invoice sent out. Next, the source document used for recording entries in the sales returns book is, options are A, invoice received, no. Invoice received, we make an entry in the purchases book. When we send out invoices, we make an entry in the sales book. Credit notes sent out, yes. So when you send out a credit note, we make an entry in the sales returns book. And debit notes issued, we'd issue a debit note only at the time of purchase returns. And so answer to this question is C, credit notes sent out. Okay. The total of discounts column on the credit side of the cash book is posted to, okay, so on the credit side of the cash book we have the discount received column, right? Because as I told you, the credit side of the cash book records all cash payments, and so when we pay creditors, we record it on the credit side of the cash book, and if we make a prompt payment to creditors, we get a discount. And so the discount that we receive when we settle creditors is shown on the credit side of the cash book, and discount received is an income for us, and hence we will be crediting the discount received to the credit of the discount received account. Okay, so the answer is C. We can actually take an example to understand this. Let us assume that X owes 1000 rupees to Y, okay, and he settles it promptly, upon which Y is giving him a settlement discount of say 50 rupees, and so the net outflow for X when he settles Y is 1000 minus 50, which is 950 rupees, and this 50 rupees is the discount that X receives from Y. So the accounting entry that X will pass in his books is Y account debit 1000 because the entire liability is extinguished, Y account debit 1000 to discount received account, it's an income, 50, to cash account, cash goes out 950. So in the cash account we would be posting on the credit side an outflow of cash of 950, and the discount received column we would be showing 50 rupees, and this 50 rupees will be posted to the credit of the discount received account, which will finally be closed by transferring to the profit and loss account. So Answer to this question is C. Trade discount received, yeah, trade discount received is not recorded at all, and so we don't even have to go through the options. It's straight away none of the above. So answer is D. 41. Transactions entered on the debit side of the cash book are to be posted to the credit side, because that's the double entry system, right? When you debit an account, there has to be a credit of an equal amount to another account. So suppose I collect cash from debtors, then entry will be cash account debit to debtors. So I'll be posting this on the debit side of the cash book, and I'll be showing the cash collected from debtors on the credit side of the debtors account. So enter transactions that are entered on the debit side of the cash book will be recorded on the credit side of the concerned ledger accounts in the ledger. Right. 42. Transfer entries are recorded in. Right. So what are transfer entries? Transfer entries are entries that are passed in order to transfer the balances from one account to another. For example, transfer of the balance in the drawings account to the capital account. Right. So the drawings that the proprietor has made during the year will be accumulated in the drawings account, and ultimately this account will be balanced, and the balance will be transferred to the capital account by passing the entry capital account debit to drawings account, and such transfer entries are passed in the journal proper. So answer is C. Next, question number 43. Unpaid salary for 1000 rupees is to be provided for in which, so unpaid salary, as I told you, is an adjusting entry, and all adjusting entries are passed in the journal proper, right? So to summarize, opening entries, adjusting entries, transfer entries, closing entries, and rectifying entries are passed in the journal proper. So such adjustments which are passed through adjustment entries are passed in the journal proper. Right. Question number 44. Which is entered on the credit side of a cash book? Straight away we can eliminate A and B, and we know that cash discount received appears on the credit side of the cash book, and so answer is D, because cash discount allowed appears on the debit side of the cash book. Right. Question number 45. Which is entered on the debit side of the cash book? Yes. So we are going to eliminate A and B right away, and we know that cash discount received appears on the credit side, and so the answer is C. Which is not a contra entry in the 3-column cash book? Cash deposited into bank, the entry is bank account debit to cash. It is a contra entry. Cash withdrawn from bank, entry is cash account debit to bank. It is a contra entry. Cash withdrawn from bank for personal use, entry will be drawings account debit to bank. So C is not a contra entry, and hence the option is C. Which of the following transactions is not posted in the ledger? Let's look at the various transactions. A, it says withdrawn from bank. Okay, so when we withdraw from bank, the entry is cash account debit to bank. Okay, now let's look at B. It says withdrawn from bank for personal use. Okay, so entry will be drawings account debit to bank, right? And withdrawn for personal use, it will be drawings account debit to cash. So it means that it's only A that is withdrawn from bank, which is not posted in any other account in the ledger. Both legs of the transaction are posted in the same book, right, in the same account. So answer is A. Which of the following types of information are found in subsidiary ledgers but not in the general ledger? Let's look at option A. It says total cost of goods sold for the period. Yes, that information can be got from the general ledger. Then the quantity of a particular product sold during the period. Yes, the quantitative information can be got only from the subsidiary books, because when we record a purchase or a sale, a credit purchase or a credit sale, or purchase returns or sales returns, the quantity is also simultaneously recorded, and the quantitative information can be got only from the subsidiary books, and we can eliminate the other two options. And so the answer to this question is B. The quantity of a particular product sold during the period can be found from the subsidiary ledgers and not from the general ledger. So with this we come to the end of the third review session. I trust this was useful. In case you have queries, you can feel free to mail me at queries@greymatteracademics.com. So with this we'll conclude this session, and until next time, see you. Goodbye.